Actually, I wouldn't say risks, I will say opportunities. And the risk is not knowing exactly the culture of Spain and knowing what are the regulatory issues that are affecting their investments. So at the end, in this particular scenario of people really with money and really willing to do an investment and to make a profit there, the three things that they have to consider is, first of all, most of the Spanish companies are family-owned companies. So they will need to deal probably with someone who has built up his own business, and they have special ideas about that. The second thing is management of those companies. So management is really close to the shareholder, and probably they will have, in certain circumstances, they will have to deal with ideas that are not really technically correct, but they are really close to what the shareholder is expecting in his company. The third thing is regulatory issues. So in dealing with particular distressed companies or any private entity who wants to go there, they will need to consider in which part of the debt he wants to get the tranche, what are the expectations for the equity, how is going to work this expectation for the equity depending on the warranties that they are having, and how the warranties are going to be executed. So knowledge of turnaround, knowledge of insolvency of the Spanish law, and right idea of who is going to be your counterpart in terms of dealing with this issue, and at the end what he wants to get about that, and probably is to maintain employment and whatever, and to maintain part of the share capital are the issues for this. Again, risk in terms of understanding, opportunities, huge opportunities for this market. Definitely. 2014, I mean, the Spanish economy is still under recovery. So there is the level of unemployment is big. The companies are really exporting quite a lot of their goods, and there is a change in productivity. I think things are going well, but there is still of the Spanish demand not really going well. There has been all these amendment pretend, as they said, agreements and refinancing agreement that they are not going to work in the future. At the end, 2013, 2014, some of these agreements are going to get up again. So it's time for new refinancings. Not really a refinancing, it's going to be a restructure of the debt and the equity. And the second thing is going to be a need for turnaround and CROs type of expertise. So there is a need for the proper industrial in the Spanish company, probably to revamp, to rebuild from something that makes them be in the future with a different capital structure and different debt. In the next 4 months, needs for cash in the companies at the working capital level, at the capital level. No additional money probably from Spanish banks if they have already debt on those deals. Not additional finance for international banks if they have debt on those deals. In some international lenders wanted to probably look for other opportunities in different markets, meaning the lending side. Different returns, different way of doing things. So there is a lot of space for funds with money, with they are willing to invest. That they need to be on the ground in these 12 months. So the agreements between equity, actual senior lenders, and hedge funds to make something viable. I'm expecting that it's going to occur. I think there's a willingness right now from the equity to do something like that. So to stay from 100% of their shareholder to X% of their shareholding, but something that makes sense. For the senior debt to write off part of the debt or put it in that way that allows the company to continue as a going concern, probably with pricing on these operations, that this is still an issue. And I see more and more transactions if they are going in this way. So if the three stakeholders are really looking together for the benefit of the whole business, going to be more and more and more.